Hello everyone and welcome to the Cannabis podcast, the show that helps cannabis companies manage their costs and tax liabilities through tax planning and proper cost accounting. I'm your host, Desiree Anderson, certified public accountant and enrolled agent at Tax and Accounting Strategies. I specialize in cannabis, CBD, and hemp tax and accounting. I chose to specialize in the cannabis space because of my long-term expertise as a tax and financial auditor. As a former government tax auditor, I saw the types of mistakes businesses made from a tax perspective, which led me to want to help cannabis business owners and CEOs stay under the taxing agency radar. As a former financial auditor, I know the importance of a financial electronic audit trail. Such a trail gives investors, lenders, and valuation experts the confidence that they need to make financial decisions beneficial to your business. Thank you for tuning in, and I hope you enjoy the show. Hello everyone, I'm your host Desiree Anderson, and today we're going to be talking about Form 8300 and how it intersects with the cannabis industry. We'll discuss what the form is, why cannabis operators need to use the form, and the important aspects of the form that cannabis companies need to know. Okay, so let's start out with what is Form 8300. So, Form 8300 is normally used as a financial institutional safeguard from activities such as money laundering, potential financing of terrorist activities, and also other financial illicit activities. So basically, the premise behind the form is to keep an eye on the flow of large sums of cash so as to prevent financial criminal activity. So then, based on this information, why do cannabis operators need to use Form 8300? Well, unfortunately, because marijuana is still on the Fed's Schedule 1 list, meaning it's an illegal drug in the eyes of the federal government, banks remain pretty reluctant to do business with marijuana-related businesses. So because of this, businesses within the industry are forced to trade in cash. And like any cash-based business, the IRS scrutinizes transactions very, very closely. Additionally, cannabis operators also need to use Form 8300 as a way to comply with the Bank Secrecy Act of 1970, and that's 1970, which is a law requiring financial institutes in the United States to assist the U.S. government in detecting and preventing money laundering. So Form 8300 is just one of the many safeguards that the government has put in place to try and curtail financial crimes. Now, because cannabis is still illegal on the federal level, it makes it even more important that the industry complies with all federal laws, which include, of course, completing Form 8300 when required, so that you minimize and any reason for the federal government to come in and try to shut your business down. So now let's get into who must file the Form 8300. So according to the law, all persons involved in any trade or business who receive money, who receive more than $10,000 in cash in a single transaction or a related transaction, which I'll break down later on to let you know what a related transaction is, must file a Form 8300. In this case, a person, as it relates to this particular form, is defined as either an individual, a company, a corporation, a partnership, an association, a trust, or an estate. So in other words, all these entities that I just mentioned are defined as persons. A single transaction, of course, means a one and done. So somebody comes in, they purchase something, end of transaction, that's one and done, that's a single transaction. While related transactions are a series of transactions that are conducted within a 24-hour period, or transactions that are conducted over a period that is greater than 24 hours if the recipient of the cash knows or has reason to know that each of those transactions is a series of of connected transactions. For example, if you received cash for the purchase of a product and the total cost of, let's say, said product is $50,000. If the payments are broken down into, let's say, 6 payments and you collect the cash over a 5-day period, that transaction is referred to as a related transaction, which means if your first installment collection is less than $10,000 and your second installment collection causes the total amount collected to exceed $10,000, at that point, you will be required to file Form 8300 even though you haven't yet collected the entire $50,000. So Form 8300 is only required to be completed during a trade or a business deal, which means if I, on a personal level, sell my vehicle for $12,000, of course, that's more than $10,000. So if I was doing a business or a trade, I'll be required to file Form 8300. In this case, I won't be required to file the form because the money was not paid to me in the course of a business or trade. It was just me buying, or rather selling, my car to someone. Now, let me just run down some of the types of transactions that are subject to Form 8300 reporting. We have a sale of goods or services, sale of real property, sale of intangible property, a rental of real or personal property, an exchange of currency for other currency, the establishment, maintenance of, or contribution to an escrow, trust, or a custodial arrangement, payment of pre-existing debt, conversion of currency to a negotiable instrument. For example, if you purchased a money order with $100, that means you took currency of $100 and you purchased a negotiable instrument, which would be a money order. Reimbursements for expenses paid, and of course, the making of repayments of a loan. Now, these are just a few examples of relevant transactions, but it's not all encompassing. All right, so another important thing to know is how cash is defined for the purpose of Form 8300. It's important to know this because you need to know if you have a Form 8300 reporting requirement based on a particular transaction. So per United States Treasury regulations, cash is defined as follows. Okay, so when you think cash, don't just think raw cash. You have to look at how the Treasury defines it. So any United States or foreign coin or currency. So that means if you are paid in dollars or foreign currency, you are required to file Form 8300 if the amount received exceeds $10,000 in United States dollars. Also considered cash are cashier's checks, money orders, bank drafts, or traveler's checks if the amount of the cashier's check, money order, bank draft, or traveler's check is under $10,000. If you receive a cashier's check, money order, bank draft, or traveler's check for over $10,000, it's not considered cash for the purpose of Form 8300 reporting requirements. Now, this is because when a person purchases a monetary instrument like a cashier's check or a money order, the bank or the financial institute, or rather the financial institution that issued that cashier's check, that bank draft, that traveler's check, or that money order to that person is required on their end to report the transaction, which means you, the cannabis operator, is not required to report the transaction on a Form AC 300. Also, personal checks are also not considered cash for the purpose of 8300 reporting. So if you receive payment for a single transaction that includes cash of $5,000 and a check of $7,000, even though the total amount received is $12,000, this is not a reportable transaction because you didn't receive more than $10,000 in cash. Also, any proceeds that you receive from a bank in the form of a loan isn't considered a reportable cash transaction for the purpose of Form AC 300. Okay, so at this point, you know who must file a Form AC 300 and under what circumstance the form has to be filed. That is, all persons must file, which includes an individual, a company, a corporation, a partnership, an association, a trust, or an estate. And once again, the circumstance in which a person must file is based on the receipt of cash for a transaction or a related transaction in excess of $10,000. Now, let's talk about preparing Form 8300 and when and how to file the form. If you download a copy of the form, you'll notice that on the top of the page, there are two boxes. There's a box that needs to be checked if you are filing an amended form, and the second box needs to be checked if you suspect suspicious activity. Now, we didn't really get into the suspicious activity aspects of the form, but just remember that if you enter into a transaction with a person that you think is up to no good, you can use Form 8300 to report this type of activity. Now, the difference between using Form 8300 for reporting suspicious activity versus reporting a payment received over $10,000 is that the over $10,000 rule does not apply to suspicious activity reporting. So that means that the form can be used to report suspicious transactions that are under $10,000. That's just an FYI if you ever find yourself in that situation. All right, so part 1 of the form requests the identity of the individual from whom the cash was received, which should include the person's name, tax ID number, address, and their date of birth. The tax ID number should be either the person's social security number, or if the person is a resident alien or a non-resident alien of the US who isn't eligible to receive a social security number, they should provide you with their IRS identification. The IRS individual taxpayer identification number, which is a number that the IRS gives to individuals who reside in some form or another in the United States, but they're not eligible to receive a social security number. Okay, so part 1 of the form should also include the occupation or the profession that's engaged in the business. For example, if you're a cannabis dispensary, you would include cannabis dispensary, or a cannabis manufacturer, or whatever aspect of the business that you are engaged in. And finally, for part 1, you are also required to include the details of and identifying documents of the person whom you received the cash from. So the document must be a legal document, like, for example, a driver's license, a passport. If the person is a non-resident alien or resident alien, they can also show you their alien registration card, or any other official type of documentation will work. Okay, so part 2 of the form is where you're going to identify the person on whose behalf the transaction was conducted. Now, you must provide that individual's or the organization's name and tax identification number. If the person on whose behalf the transaction is being conducted is an individual or a sole proprietorship, then you're required to include both their social security number and their EIN number, if they have one, because they may be a sole proprietor that does not have an EIN. But if they do, you want to include both their social security number and their EIN number. Now, if the person is an organization, you only need to include their EIN number. Okay. So there is also an area to include a DBA, that means doing business as, if the organization is doing business under a different name. You'll also need to include the business's address and other identifying information. Then we have part 3 of the form. So part 3 asks for the description of transaction and method of payment. So in this section, You should include the date the cash was received, the total amount of cash received, whether or not cash was received in more than one payment. For example, was the cash received as an installment payment, or was it a payment on a related transaction? You're also going to include in part 3 the total price of the transaction associated with the payment. So that means that if it is an installment payment, let's say, for example, the total transaction for this particular, or rather the total amount for this particular transaction happens to be $50,000, but you're currently picking up your customer is currently paying you $11,000. So you want to include how much you received, which is $11,000, and then for the total amount of the transaction, you're going to put $50,000, just letting the IRS or the banks know that the total amount for this particular transaction, even though you're not receiving all the payment today, is $50,000. Okay. There are also a few other areas to complete in part 3, but I'm going to let you take a look at the form for yourself so that you can get used to how the form is laid out. And finally, part 4 of Form 8300 asks for your information about the business that received the cash. So it asks information about the actual business that received the cash, which would be the cannabis business in this instance. So the name of the business, the employer identification number for the business, and also the nature of the business. Now, when describing the nature of your business, you have to be specific and not vague. For example, rather than describing the nature of your business as a store or a manufacturer, it's a lot more descriptive to say a cannabis cultivator or a cannabis dispensary. Okay, so nothing vague. It has to be specific. Now, I recommend that you download a copy of the form once again and just look at it. Take a look at it. It's a fairly simple form to fill out. The most important thing to keep in mind is that you fill out all of the information on the form, which means you need to make sure that you have all the details you need from the person that you're receiving the money from, all the necessary information from the person responsible for picking up the money, and also the necessary information about the business itself. Now, although not filing a Form 8300, or rather I should say, yeah, that's right, not filing a Form 8300 is a major offense that will definitely open you up to deep trouble, filing an incomplete form will also subject you to very expensive penalties that will eventually chip away at your profits. Okay, so of course, it's always best to file it than not to file the form. But also, you want to keep in mind that when you do file the form, that you have all the information you need so you can complete and file a complete form, and not just, and not have bits and pieces of important information missing. Okay. Now, all forms must be signed under penalty of perjury by an individual within the business that has been authorized to do so. Okay, now let's get into when Form 8300 is due and also how to file the form. Form 8300 is due within 15 days from the day you received the cash. So if you receive payments in installments that are related to a single transaction, you have to make sure to complete and file Form 8300 once you received over $10,000 in installment payments towards the total amount due. So if let's say you're due $50,000, okay, and you've received $11,000 of the $50,000, you have to complete and file Form 8300 for the $11,000 that you received. You can't wait until you receive the entire $50,000 before reporting the receipt of funds on Form 8300. Filing Form 8300 can be filed in two different ways, either by mailing a completed form to the IRS, and the mailing address is actually, I believe it's on the form, or you can e-file the form using the Bank Secrecy Act electronic filing system. Now, e-filing the form is free, and it's a quick and secure way to actually file the form. And most of the times dealing with the IRS, because I deal with the IRS a lot, and they really do prefer that you e-file everything that you can. So if there's an option to either mail something out or to e-file something, they really do prefer that you e-file. And I recommend that my clients e-file everything that is e-fileable, if that's a word, because then you can be almost guaranteed that the IRS is going to receive it, and that they're going to receive it a lot quicker, and that your case or whatever situation you're dealing with is going to be handled a lot faster. When you mail stuff to the IRS, a few things can happen. It could take forever to get there. And not only that, they are known for losing stuff. I have had them lose quite a few documents that I have sent to them in the past. So I truly try to avoid mailing anything to the IRS. So my suggestion would be for you to e-file the form if you can. Okay. All right. So in addition to the requirement to file 8300, there's also a second requirement that stipulates that you provide an annual statement to every person you completed a Form 8300 form for during the year. Now, keep in mind that there is no official IRS form to complete when sending out the written statement. You just have to make sure that the form that you create contains all of the mandatory information. So what's mandatory for this form? Okay, well, the form of the statements must contain the name, address, telephone number of the contact for the business, the aggregate amounts of reportable cash received from the person during the calendar year, and a statement that you, the filer, reported this information to the IRS. So that means that if you have a customer that paid you $1 million in a particular year, you want to send them a yearly statement, letting them know how much they paid, which is $1 million, and that you have reported this information to the IRS. Now, the deadline to provide the annual statement is January 31st of the next calendar year, meaning for everyone you filed a Form 8300 for in, say, 2022, they should receive an annual statement from you by no later than January 31st, 2023. Now, there are two exceptions to the annual statement rule. Okay, so one is if you or your business only filed one Form 8300 during the year for a particular customer, you are allowed to send a copy of that same Form 8300 to the customer instead of an actual annual statement. However, keep in mind that even if you provided a copy of Form 8300 at the time of the actual transaction, you're still required to provide your customer with that same copy at year end by no later than January 31st, okay? Having given it to your customer earlier in the year, that doesn't count, okay? You have to still give them the form by January 31st of the next year. The second exception to the annual statement requirement is that if your business voluntarily files a Form 8300 to report a suspicious transaction, you should not send an annual statement to that customer, okay? You don't want to alert them that you sent an 8300 to the IRS. If it's suspicious, just do it. And, I would say just do it and forget about it. Don't send them an annual statement alerting them that you actually reported that transaction to the IRS. All right, so now we're going to talk about something called structuring. Okay, what does it actually mean? Now, I'm going to keep this really simple by using an example of an auto dealer indicted for illegally structuring cash transactions. Now, I'm going to read the story word for word so that I don't miss any details. So just take this information that I'm about to read and just take it and apply it to the cannabis industry. All right, so here we go. On June 13th, 2013, a federal grand jury charged an automobile dealer in Ohio with illegally structuring bank deposits to avoid IRS reporting requirements. The 26-count indictment alleges that the company made multiple cash deposits in amounts less than $10,000 on the same day or consecutive days in order to avoid filing a Form AC-300. The company faces penalties of up to 5 years in prison for each count, while the business faces penalties up to $50,000 for each count. Now, this case, it illustrates that the authorities remain vigilant in monitoring cash transactions and prosecuting individuals and businesses that violate reporting requirements. You should take cash reporting requirements seriously and establish safeguards so that your employees will not only report cash transactions that exceed $10,000, but also detect efforts by others to avoid reporting requirements by making several smaller cash transactions. So basically, the last paragraph is saying that you need to have safeguards and policies and procedures in place when it comes to your business. These policies and procedures should list how to handle Form 8300 transactions. This way, you will avoid having to go through something like what this automobile dealership went through. So you want to have your employees look out for certain behavior and for certain types of transactions. Okay, so you want to let them know if ABC happens, then you need to do ABC, or you need to document ABC. Okay, you want to have these policies in place so that way your employees are actually looking out for something in particular, for a particular behavior. Okay, because if you don't have these policies and procedures in place and you don't talk to your employees about this, then they don't really understand what's going on. Okay, they're just doing their job and that's it. Okay, so basically the story. Story is that the auto dealership tried to game the system, basically, by breaking cash receipts into smaller chunks, so that they can avoid completing and filing Form AC-300. All I have to say about structuring is don't do it. It's not worth the backlash nor the punishment if you get caught. Okay. All right. Let's talk about penalties. Okay. This is something that you definitely want to try to avoid. Okay. The IRS normally adjusts the penalty amounts annually for inflation. So if you're looking at, say, something that occurred in 2018 and you're being penalized for something that occurred in 18, and then you're being penalized for something that occurred in 2020, you're going to notice that the penalties are probably going to be a little bit different because of inflation. Just keep that in mind. Okay, so based on this useful information, penalties for Form 8300 will change from year to year. That's the basic premise to that. Okay, the rates I'm going to discuss today are based on 2020. So if you're listening to this podcast in a subsequent year, I'd advise that you check the penalty amounts in the year you are currently in. All right, so there are two main types of penalties, and they are criminal and civil. Each type has several subsections to them. Now, the civil penalty for negligent failure to timely file or to include all required information or to include correct information is $270, and that's $270 per return. The IRS does, however, give you 30 days to cure your late filing. So if you cure your late filing within 30 days, then the penalty is then reduced to $50 instead of the $270. So if you negligently fail to file, or if you file the 8300 and you realize that there's missing information or there's incorrect information, and then you happen to receive you happen to get penalized the normal $270, keep in mind that if you go ahead and take care of that within 30 days, you're only having to pay $50. And of course, we know $50 is way better than $270, especially if you're talking about several Form 8300s, okay? Now, the civil penalty for intentional disregard of the requirement to timely file or to include all required information or to include correct information is the greater of $27,820 or the amount of cash received in the transaction. Now, even though it's either or, whichever is greater, it won't exceed $111,000, okay? So that means that if you intentionally don't file and the amount you should have filed was, let's say, $75,000, that means that your penalty will be $75,000 rather than $27,820. Okay, so that's not good. That is absolutely not good. So you want to make sure that you don't intentionally disregard what's required of you. I say, don't let this happen to you. Once again, have a company process in place that will assure that you don't that you don't neglect to file each form on time. Okay, because I can understand how one could forget, because if you're having to file these forms every 15 days, and if you have a lot of cash transactions, meaning people are coming in on a daily basis, paying with large sums of money, then, it's easy for 15 days to sort of wander by and you forget to file. So you got to have reminders. You got to have processes in place to remind you every time you receive, every time you have a filing requirement, that you want a process to remind you that you have that filing requirement, so you don't forget to file all the Form 8300s that are required to be filed within that 15-day time frame. Okay, so the civil penalty for negligent failure to furnish a timely, complete, and correct annual statement to the person that you provided a Form 8300 is also $270 per statement. However, once again, if you cure your failure to furnish the annual statement within 30 days, the penalty is then further reduced from $270 to $50. Intentional disregard of the requirement to furnish timely, correct, and complete annual statements is $550 per failure, or 10% of the aggregate amount that were not reported, or rather that was not reported, whichever is greater. So once again, if the amount is $20,000, that's how much the penalty is going to be instead of the $550. So if the 10%, if the 10%, or rather if 10% of the amount is $20,000, that's how much you're going to have to pay in penalties rather than paying $550. Once again, you don't want to go there. Okay. Now we have criminal penalties. So criminal penalties, a person may be subject to criminal penalties for all of the following reasons. If you willfully fail to file a Form 8300, if you willfully file a false or a fraudulent Form 8300, if you stop or try to stop a Form 8300 from being filed, if you set up or help to set up or try to set up a transaction in a way that would make it seem unnecessary to file Form 8300, and that would be considered, I guess that would be structuring, if you try to structure it. Okay, all of these are will subject you to criminal penalties. Now, any person required to file Form 8300 who willfully fails to file, okay, who fails to file timely or fails to include complete and correct information is subject to criminal sanctions as a felony. Sanctions can include a fine up to $25,000 or $100,000 in the case of a corporation, and or imprisonment for up to 5 years plus the cost of prosecution. So not only are they fining you either $25,000 or $100,000, but they're going to in turn make you pay for the cost of the prosecution. So you're paying for your own self to go down. You don't want to do that. You don't want to find yourself in that position, okay? Any person who willfully files a Form 8300, which is false with regard to a material matter, may be once again fined $100,000, okay, or $500,000 in the case of a corporation, and or once again imprisonment up to 3 years plus the cost of prosecution. Okay, don't do that either. Now, the penalties for failure to file may also apply to any person, including a payer who attempts to interfere with or to prevent the seller or the business from filing a correct Form 8300. This can include any attempt to structure the transaction in a way that would make it seem unnecessary to file Form 8300. Remember, I said that earlier. Okay, this is called, once again, structuring. I keep repeating the word structuring because this is something that people think they could get away with. Okay, I've seen it quite a few times dealing with clients where they think that they can beat the system by structuring payments. And believe you me, you don't get away with it. And then I always say, why would you want to play structure Russian roulette with the IRS? You don't want to do that. Just go ahead and do what you're supposed to do. So I'm going to once again say the word structuring. Okay, I'm trying to make it stick, which means breaking up a large cash transaction into small cash transactions to disguise the true amount of cash involved in the transaction. Don't do it. Okay. It's not worth it. It's absolutely not worth it. Now, let's talk about statutes of limitations, because there is always a statute of limitation, meaning if the IRS doesn't come for you in a timely manner, that means that you pretty much got away with whatever it is that you did. Okay. Now that we know what the penalties are for not abiding by the filing rules or of Form 8300, let's now talk about how long the IRS has to assess penalties for non-compliance. There is a civil statute of limitation related to Form 8300. Simply put, the IRS has 3 years to come for you for either not filing or filing an incomplete Form 8300. The 3-year limitation starts on the day you filed the form. Okay, so it starts on the day you filed the form. It doesn't start on the day that the form was due. It starts on the actual day that you filed the form. So if you happen to be a late filer and you filed that particular form late and you didn't file it within the 15 days and you filed it, let's just say you filed it 6 months after the fact, then the statute of limitation begins 6 months after the fact, because that's when you actually filed the form. Okay. Now, there is no statute of limitation if you never file the form, meaning if the form was never filed, the IRS can assess penalties at any time. So if you were supposed to file a form and you didn't file the form, that means that the clock hasn't started. So if the clock hasn't started, that means that the IRS can come for you for penalties at pretty much any time. Okay. And as for the annual statement, there is no statute of limitation for penalties for failure to file an annual statement. That means that if you fail to file an annual statement, there is no statute of limitations, which means that you can be penalized at any time. Okay? Well, guys, that's all I have for you on this topic for now. Thank you for joining us this week on Cannabis Accounting. Make sure to visit our website at geotaxandaccountingstrategies.com. And don't forget to subscribe to our podcast. And if you found value in this show, we'd really appreciate it if you'd simply tell a friend. I am also available to help cannabis CFOs, investors, and other accounting professionals with tax planning, GAAP, and cost accounting. Please don't forget to tune into our next episode. And this is where I sign off. Have a great day, everyone.